Now, as like Sam said, the naira seems to be weakening. We're seeing it at 159.9 naira to the dollar. Now, we saw the CBN offering about $250 million at the WDAS auction, sort of trying to intervene and help the naira sort of strengthen. Now, what do you feel is responsible for the weakening of the naira, first of all?
Hi, Uche. Like you said, the naira exhibiting some form of weakness. CBN activities have been quite supportive. I bet if without the CBN, you might have seen naira at a newer levels than this. CBN introducing about 500 million for this week's auction, both on Monday and today. Yeah, and leaving the rate stable at 155.75 actually portrayed some kind of support in an overall theme for the currency. But you must not diffuse the fact that the CBN window has some eligibility in transactions that can go through that window, and those transactions that can go through that window has to come into the interbank market. Of late, we've actually seen a reduction in the kind of liquidity that we typically see on the FX market outside of the CBN windows, outside of the major flows that we typically get. We're not seeing that size anymore, even though they still come, but we're not seeing that size anymore. And it's just a combination of the fact that really the demand hasn't stopped, the demand hasn't waned, but more like the supply side has waned a bit, so you tend to see the rate push up in response to that.
Now, what do you feel about the CBN's intervention? How reassuring is this, Eze? And of course, do you see the naira continuing to maintain this sort of poor performance in the coming weeks?
Fine. I think the CBN would respond in an appropriate manner, and they've been doing so. Overall, we must not forget the fact that if I can use the asset classes and the general economic sentiment on the whole world doesn't seem to be so on the highs now. There's a lot of speculation, a lot of jittery, which is coming especially from the Eurozone, and obviously it's filtering into emerging market, and of which Nigeria is being affected by that. You can't remove that factor. Coming into the fact that overall risk asset classes are not getting the perceived boost, and you have oil as a major earner for Nigeria. There's some form of weakness that will obviously filter into the currency front. I mean, that is not unexpected. But overall, I think the CBN continues to send a strong signal that they are here for the currency, and I think they have the capacity to do so. For how long, I really can't say for now, but I mean, in the short to medium term, I think they have the capacity to do that, and they will continue to do that. I expect they will continue to show that they're able to meet the supply. They will continue to show that the rates are on stable levels. They will continue to show that they are here to fill up all demands that come in through their window. They will continue to generally put a form of support on the currency front. Overall, I think their intervention activities really, like I said, is not different from what other emerging market central bankers are doing. We've seen intervention across Asia into Turkey and the likes, and what we see the CBN doing is really no different from what other major central bankers are doing as at now. It's all about what's happening now.
That's
and
true.
People.
Well, Eze, let's first delve further into the bond market. Of course, we saw successful bids on Monday, 17th bond auction for both 5-year and 10-year maturity bonds. In fact, we both saw them oversubscribed. Now, what are some of your key takeaways from this auction compared, of course, to the previous auction that we saw last time?
Okay, I think if I look at the auction, especially in the 5 and the 10 year, on the 5 years we've got a slight increase in yield, on the 10 year we've got a slight decrease in yield. I think on the cover on the 10 years was much higher than it was the previous auction, and likewise on the 5 years it was a bit lower than the previous auction. This overall data gives me a sense that people are actually looking more at the long end of the curve, I think for now, in terms of the overall fixed income classes, both from the short end out into the long term, I think investors still see some real returns in terms of inflation versus what the yields on those asset classes are, and I think the performance has been relatively fair overall in terms of the fact that if you still consider, I think you would have seen some much healthier level, if not the way the whole system currently is at now, and investors' appetites are really at almost their lowest ebb currently. But even at that, and you're seeing this kind of cover and this kind of performance, I think it's quite a fair auction to be on the overall view for that auction.
But I mean, tell me more about the marginal rates. We do not see much change at all in that area. In fact, we saw the 5-year remain at 15.25% and 10-year at 15.45%. So what really is your take on this?
You know, overall, I think if you look at it on the marginal rate, of which I think even if you're a fast money guy or a real money guy or an astute investor, whatever class of investor you are, one thing that most people will look at when coming into this kind of instrument and in the market is what actually are my real returns on this asset. And I think currently those bonds are giving positive real returns in terms of what the investors might want to look at. That is shown in the way that is translated in the relative stability of the yields on those investment on those assets. I do not think you will see any major shift for now. If you look at the expectation from the CBN angle in terms of inflation rate, and in terms of what their policy response to anchor inflation rate at certain level, I don't think the rates have gone into the red light zone, to use that word, for a major shift in policy for now. And as long as that remains, I really do not think we would get any major shift in rate. Maybe an uptick here and there, but overall, I would classify the yields across those tenors as fairly stable.
Well then, Eze, how do you think foreign investors should invest across the yield curve? Because of course, a big debate right now is how cautious foreign investors are when it comes to our fixed income markets. And of course, there's some worry that we will see some fallout from European investors, of course, as a result of what is going on in the Eurozone. So how do you think foreign investors should invest across the yield curve?
Well, for me, I think overall on the yield curve, depending on what your portfolio structures are, I think Nigerian market still provides some attractive returns. Eurozone crisis not being ignored. I think one thing we might want to know is that some smart guys really still coming to the market. Looking at the auction results, especially for the 1-year T-bills, which give a first sense of what the offshore guys are doing in our local market. We noticed a drop on the cover for the last 2 auctions, and the size that investors have actually done in the last auction. We've seen an uptick in yields, but even with all these factors, I really don't think that so much of a panic that should happen. I think Nigerian market across the spectrum do offer some good returns, and I would advocate for across the spectrum. Trust me, you'll get some good returns on the Nigerian assets for now.